So I am live on YouTube. That's correct. Let me go live on LinkedIn. So I am live on. What the hell is this? I'm gonna be live on LinkedIn and there we go. Live on LinkedIn. Let me send this message to the folks on WhatsApp. Just 1 second, folks. WhatsApp buddies, here you go. Thinker's frequency. Right? Yeah. Thinker's frequency. Alright, yes. So how do we get to the community view groups? Thinker's frequency. Yes. This goes. #201st episode, weekly mental workout. Right, and there we go. We'll have to do the link again. There we go. Yeah. Thinker's frequency. Great. Done. Whew. Hard work. Hard work. Alright, so now we are live on YouTube, live on LinkedIn, live on everywhere. Okay, got it. So we should begin. We should begin the show that we deserve. The show that we deserve, right? There's a comment on. Yo, come on, you fucking idiot. Alright. Bum bum bum. Bum 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 bum. Bum 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 bum. Bum 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 bum. Bum bum bum. Bum 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 bum. Good morning, everybody. Welcome to Thinker's Frequency. Our daily No, it's not a daily mental workout anymore. I'll have to do it again. Good morning, everybody. Welcome to Thinker's Frequency. We're having such a good time. This is the peak of human civilization. We're working so hard, doing such good work for ourselves, our parents, our kids, our siblings, our husbands, our wives, our friends, everybody. Well, not other people's husbands and wives, I hope. And just when we thought things couldn't get any better, like they couldn't possibly get any better, well, they just did. Call it divine intervention, folks, but things just got a whole lot better. Now we have Thinker's Frequency, our weekly mental workout, our weekly dose of insights and analysis that don't lead to paralysis right before we punch in. So let's continue with our journey of reading between the lines, things that are especially interesting and important in the world of business and finance. Let's go. Oh, but before we go, you gotta follow a tradition, right? We know the tradition. You know, the sweet and sacred tradition of the simultaneous sip. We'll all sip something together and it'll bring us good luck, as it always does, without fail, every day. And all you need for the simultaneous sip is a cup or mug, a glass, a tank, a chalice, a stein, a canteen jug, a flask, or a vessel of any kind. Pour it with your favorite liquid. I like some hot water with black pepper in it. And here we go. Beautiful. Sublime. Let's do it again. Lovely. You know what the simultaneous sip says, right? You know what it says? It says that you are not alone. It says that we're in this together, which is such a beautiful thing to say. With that out of the way, let's begin. So, heavy dose. I'm just waiting. Did people get my message on WhatsApp? Yeah, they did. I don't know if it's coming. Let's do it. Let's begin anyway. All right. So, beginning with the geopolitics, of course, a lot of things happened in the last week. We all know what happened to Venezuela, right? Venezuela essentially got taken over by US, which was an extraordinary tactical surprise for the world. Nobody expected Venezuela to be like the king of Venezuela. He can be called king because he was not very democratic. But the leader of Venezuela essentially taken over and nabbed by US military. That was pretty extraordinary. So that happened. And now protests are happening in Venezuela about restoration or requests of restoration of Maduro regime. And you know who's funding those protests? Who do you think is funding the protests? Right? It's it's George Soros led NGOs that are funding Venezuelan protests on requesting installation of Maduro's regime. So that's what's going on. It is very incredible how George Soros essentially manages to stay in the line of fire when it comes to all the world leadership, right? So that's what's happening. When it came to Venezuelan resources, there is $17 trillion worth of resources there, right? Three largest known resources, natural resources, largest known reserve of oil in anywhere across the world is in Venezuela apparently. But that's not a sweet grade oil, right? It's a sour grade oil. So a lot of investments will have to be done in Venezuela for that for that extraction to be done profitably. It's not going to lead to that much money, right? But it's going to be cataclysmically important for US. However, it's not like every oil mine out there or oil field out there, right? So that's what's happening. But that is setting the stage for yet another takeover, new age colonial takeover of a country. The next is Greenland. Greenland, of course, Trump has said Greenland is very, very important for US and they're going to take it. Initially, people thought that this was a joke, right? When Trump mentioned the intention of US to take on Greenland, people thought it was just him being funny. But it has turned very, very real. Everybody knows now that the Greenland operation is going to be, it is going to happen sooner or later, right? So why Greenland? Of course, because of the rare earth minerals, some people say. A lot of people are divided on what it does to the global economy. People who were very bullish on the cause of de-dollarization, people who said that US time as the global financial hegemony is done, right? They are slightly, let's say, perturbed by whatever is happening, because if US has been able to take over Venezuela and all its oil resources, which it says it'll claim, right, unabashedly, a lot of its debt problems should get solved, right? A lot of people are saying no, it doesn't happen like that, but it's just logically consequential that a lot of its debt problems will be solved. If a lot of its debt problems are solved, right, what happens to the cause of de-dollarization? Obviously, it takes a backseat. It doesn't stay as prominent as you would expect it to be. If it doesn't stay as prominent as you'd expect it to be, how would you deal with the gold and silver play? What happens to gold and silver if American economy essentially gets strengthened on the back of Venezuelan oil, right? Well, gold and silver lose their value as a hedge against dollar. I mean, immediate value gets hedged, right? You don't think of uh, hedging something which is only getting strengthened with time. And nobody is saying it like that. Nobody is thinking about what it will do the gold to the gold and silver markets. Let's say just gold markets. Silver is utilitarian, so let's talk about just gold. People say that no, it's still very tough. Tough, there's a lot of debt trouble, 40 trillion, and so on and so forth. But US is going to make a lot of money, and if it's being able to service the debt with an ease, which is better than before, it should lead to some softening of gold prices, is what I believe. However, it's not a you know uh, ubiquitous view, or it's not a conventional view. People are not agreeing with that. So let's see what happens. But I believe it should lead to some effects on crude. I'm sorry, on gold, right? So that's what's happening with gold and America. Of course, the everything is pretty much still where it was when it comes to Israel, Gaza, Russia, Ukraine, Pakistan, Afghanistan, India, Bangladesh. Everything is pretty much where it was. The Nigerian attacks also happened, right? China, Japan, and everything. So that hasn't changed much, but the Venezuelan takeover has literally caused a big stir. Now, coming on to US tariffs of 500% on Russia related countries who are buying Russian oil. That is effectively a tariff on India, right? 500% is a lot. Even 50% was unimaginable, but 500% should be very, very weird, right? However, uh, that particular bit is not gonna uh, when you're talking about the 500% tariff that US is laying on India, it's not really going to pan out. It's something that is on cards and it's been announced, but it has struck the markets pretty solidly. So that is a very weird situation, right? If you remember, if you notice, yesterday markets fell by 1%. Nifty and Sensex, everything just 1%, 0.91%. And that was a big draw, right? And you got to see how this particular thing develops. Even though these tariffs don't work out as planned by US, or it's just a negotiation tactic for them to actually uh, get a better BTA, bilateral trade agreement with India, it's going to actually affect the Indian sentiment, because a lot of sovereign wealth funds are escaping India and moving on to the developed economies, right? It's gonna cause a bit of problems there. But for now, the markets tumbled yesterday, and then people are saying that this thing might just get stabilized, and this will keep going on. So that's what's happening. One second, folks. Some idiots on LinkedIn commenting nonsense. Great. Yeah. So let's move on, folks, for on the current business news that's going on with. Firstly, we've got to celebrate, or let's say acknowledge, that we were right about something. If you remember, Unacademy and Upgrad were going through a conversation about taking an acquisition. Upgrad was looking at there were talks that they were looking at a $300 million valuation for an academy. Now, I had written, so just giving you a context, earlier it was Alan which was looking at buying Upgrad, right? For about 750 million, 700, 750 million. I had at the time written that an academy is not worth 700, 750 million. This deal will not work out. It's just impossible if this deal uh, works out, right? And then Alan, the Maheshwaris cancelled that deal and they moved forward, right? They didn't acquire an academy. Just 9 or 10 months later, Upgrad came in the fray and they said they'll acquire an academy, this time at a $300 million valuation, right? This is when Unacademy has raised about $850 million in total, right? So Unacademy has raised about $850 million. It was at its peak it was valued at $3.4 billion, right? And now it was getting acquired at $300 million. Now, in my article about this particular deal, I had written that this deal as well is very, very expensive. An academy is not worth $300 million. I had written an academy, I had said, has about $100 million in cash, but still it would be funny to value it at $300 million because of it's a declining revenue play. It's loss making, right? It's declining revenue, so there is no way it can have a multiple of greater than one when it comes to revenues. So an academy essentially will be cash in hand plus whatever its revenues are, 0.75, something like that. According to that, its valuation would be around $200 million at best, right? Because it had $100 million left. Now, apparently, the founders of Upgrad have given up on an academy. Mr. Ronnie Screwvala has come out and he has said that he's not looking at taking over an academy anymore. So that is very, very strange. That's pretty unbelievable, right? But that's happened. Now, an academy is basically uh, an ongoing concern right now because it won't survive, right? Most likely, if it doesn't get bought and it can't lose all the money it's losing right now. So no wonder what no, it's great wonder what happens to an academy. However, uh, this is a great vindication of the research that we were doing earlier, that an academy wasn't worth this much. So that has happened. Mr. Peeyush Sethi writes, read on the internet that Reliance and Nayara are only two companies effectively getting benefit from Russian crude, and such crude is only for Europe and not going into domestic market. Not sure true. So Reliance and Nayara. So Nayara is a joint venture between Reliance and Rosneft. So Reliance and Nayara is slightly wrong uh, technically, because Nayara is a joint venture between Reliance and the Russian company Rosneft. It's a 49-51% joint venture, and they are getting oil from unsanctioned sources now. They're basically trying to do whatever they can to avoid the sanctions. So there was talks about them using dark fleets and so on and so forth, right? So that was going on with Reliance and Nayara, and for now it is all very, very complicated because nobody knows how this tariff is actually going to pan out. Maybe it doesn't pan out at all. Maybe it's just a trade negotiation tactic, right? But till then, it's going to cause some discomfort for the people who are looking at investing in the country, right? They will be uh, slightly scared. So let's move on, folks. I think the idea of thinkers frequency group wasn't that sound, don't you think? Because not a lot of people could actually join, because maybe the thinkers frequency group is muted already and a lot of people didn't get to know. Maybe if I would have posted on the actual group, it would have led to something different. I'm not sure. But at the moment, I feel a lot of people who have been regular viewers haven't been able to join today, which is sad. But okay. What I remember is Nayara is the erstwhile SR group in partnership with a Russian firm. Uh, Well, I am not sure about the SR group's linkages. Maybe there is a linkage between Nayara and SR. However, Nayara is definitely a Rosneft and Reliance collaboration. That's certain. Truth. Uh, and they are dealing with the tariff situation in whatever ways they can. That's also true. I'm not sure of the SR Nayara linkage. Nayara SR. Hmm. So Mr. Ankur Pandit had written, okay, SR Group. You're right. You're right. SR Oil Deal. SR Oil Limited is now known as Nayara uh, Energy Limited. So that is 100% correct. Cheers to Mr. Ankur Pandit. Let's move on, folks. Factory rollout of 23,000 crore SOPs likely for local push. Local push for electronics manufacturing, of course. Electronics manufacturing Make in India momentum. Make in India incentives program for scaling up domestic production of high value capital goods on the anvil. A lot of things are getting panned out when it comes to uh, electronics manufacturing. ECMS, we know about the electronics component manufacturing scheme. This is related to the capital goods. This is uh, basically the heavy ones, right? They are looking at some expectations. Construction equipment gets 16,000 crores, high tech auto parts 7,000 crores, right? And that is basically 23,000 crores worth of investments being put up. Mr. Uh, there is a very big article by the economic advisor, right? And he says that India is essentially wanting to go with the Atmanirbhar plan. However, the Atmanirbhar plan will have to be really expedited because it should be buy Indian instead of buy Indian after thinking, right? It should be buy Indian without thinking. And that should be India's state when it comes to manufacturing. He says Atmanirbharta when it comes to India is very important when it comes to API manufacturing, active pharmaceuticals and intermediate products, electronics, right, drone components and defense equipment components and so on and so forth. And he is really he's basically charted out tiers to where Indian Atmanirbharta or let's say domestic consumption play or domestic manufacturing play needs to be put up, right? For now, 23,000 crores SOPs, right? Construction equipment is a very, very big deal. Let's move on, folks. Army, by the way, is has set aside 2,000 crores for drone acquisition. They want to acquire drones worth 2,000 crores. They are basically suicide drones, which is exactly what India wants a lot right now. If you've been following Thinkers Frequency, you know how we've been talking about the value of drones and how drones are essentially nuclear power without a limiting factor, right? We've talked about that enough. So India is warming up to that. 2,000 crores is not a lot of money, but it is a start, right? An active drone manufacturing ecosystem will help India in a lot of ways that we cannot foresee. We've been talking a lot about that, and this is going to be very, very important. That was just announced a couple of days ago. Today it says that Pinaka Rocket Systems, right? Tata and L&T have bagged orders. That is basically the multi-barrel rocket launchers with orders going to private sector. Now, this is also very, very important. Defense, as we've noted, is the industry, right? The February budget should do something amazing for the defense play. Defense industry is very important for the country in a lot of strategic ways, right? So if India is being able to do something when it comes to spurring the manufacturing of defense ecosystem in India, it's gonna be very, very important. So for now, Pinaka Rocket Systems, basically anti-aircraft defense systems, right? One of those multi-barrel rocket launchers. Let's move on, folks. The two companies will work with army-based workshops. No, Pinaka isn't the anti-aircraft. Pinaka is actually the long range or the medium range attack plane, right? Let's move on. Trump tariff hurt the markets. We've talked about that. State-owned investors fund flows to India dry up amid global turmoil. So 70% year-on-year fall. Gulf-based investment shrink to nearly one third. This is what we were talking about, right? If you look at ADIA, ADQ, DP World, all of these funds have really taken a backseat, and all of this money is going into the developed economies. Why? Because developed economies have been able to really catch on the AI and data center bandwagon. Indian markets have little to offer when it comes to that. Even though Indian markets exposed to the companies exposed to uh, AI and data center players beginning to warm up, but it's still a long way to go. So, investments by state owned investors, SOIs, including foreign wealth funds, sovereign wealth funds, sharply fell by 70% year on year, right? This move could be attributed to high interest rates, geopolitical uncertainty, besides a growing investment focus on sectors such as digital infrastructure, data centers, and AI. India is under indexed when it comes to AI, right? Now, under indexed when it comes to AI was a double edged sword. It was being looked at as a hedge against the AI bubble. So if there's a lot of AI bubble going on, right, it would have made sense for Indian market to attract a lot of money because if that crashes, Indian market goes up. But AI bubble doesn't seem to be in a spot right now. AI bubble is doing pretty well, right? The Magnificent Seven and everybody. Now they're talking about, if you've heard about this, they're talking about creating data centers in space, right? And solar based data centers. If solar based data centers happen, that is going to be yet another uh, inflection point in the whole AI story and the data center story, which is pretty extraordinary, right? So that's what's going on. Let's move on, folks. For now, Indian markets look tepid despite UN upgrading India's growth rate 6.6%, 6.7%, right? Everybody has upgraded India's growth rate. We are looking at a 7.2. That's the target, right? Despite all of that, Indian markets are not really attracting foreign money, and it's been on for a very long time now, over a year or so, right? Let's move on, folks. There is a pretty interesting case going on between the new Mumbai airport, right, the metro play. This is a tiff between the developers, that is the Adani group of the Mumbai airport play, and the telcos. Now, telcos and have to essentially pay these facilities to get their own services, right? What these airport guys have done is they've taken third party services. Telcos say that this shouldn't be allowed and they should pay. And the rent these guys are asking, the Adani guys, or basically the developers, new Mumbai airport developers, it's much, much higher. So they say that earlier price is something about a 15 lakh rupee per unit area, right? Whatever that unit is. Now it's at about 92 lakh rupees, which is too high, which is too high. Now Adani's defense on that is that it's supposed to be high because we've got to feed the monkey. We've got to recover the money invested in a new airport, and that investment recovery needs to be quickened. And since Mumbai airport is already a matured place, new Mumbai airport, Navi Mumbai airport is not a matured entity. That tariff will have to be steep. Now, the telco guys say that recovery of that money is supposed to be happening in 20 to 30-year period, right? But these guys are trying to recover that money in 2 to 3 years, which is not nice. So this is the rigmarole which is happening between the two parties. Very interesting, very interesting. But let's see. Who do you think is right when it comes to this conflict? Do you think the telcos are right? Right, they should be allowed and they should get the usual tariff, or should the developers be allowed to have third party operators doing the job? Right now, when it comes to the Navi Mumbai airport and the line, they say only Vodafone and BSNL work, right? The two biggest operators, that is Airtel and Jio, they do not work at all. So call disconnect happening. This is very interesting. Let's see what happens there. Moving on, folks. CVC, the private equity company, is looking at buying Value Labs. Value Labs is an IT services company. They are getting valued at about 1.1 to 1.2 billion dollars. Interestingly, Value Labs was founded in 1997 and is completely owned by the promoter family, which is very interesting. 87% of it is owned by the founder, and the rest is owned by his wife, right? Uh, they are basically looking at keeping a 15 to 20% stake after the acquisition, right? So that's what's happening. Let's move on, folks. IT sector is obviously facing a lot of M&A action. That's pretty good. Mr. Ankur Pandit says 6x sounds too much. Adani is being too ambitious. Well, that's one way of looking at it. Absolutely. Yeah, it could be said. But their perspective is also not very off, by the way, I think, because they're saying that it is a new facility and it is a very ambitious facility and it needs to be, I mean, we've invested a lot in it, right? So let's see how this particular thing gets resolved. Let's move on, folks. Credit cost up for Shapurji Palonji Group on timeline slip up. So Shapurji Palonji Group, as you know, has a serious debt situation happening, right? Cost of its private credit financing rose about 2 percentage points to 21.7% after a contractual step up linked to payment milestones were triggered. So it's not a covenant breach kind of a situation. That means that they've not defaulted on the loan yet, right? But one of the entities which was supposed to pay, they haven't. So as that deal gets refinanced, or let's say paid by this month or so, it's gonna be fine. However, Shapurji Palanji's debt troubles are pretty solid, right? Their promoter pledge and everything, it is a very solid concern. They are trying to raise fresh debt to essentially pair some old debt. Let's see how that pans out. Obviously, we know what happened with Shapurji Palanji and Tata Group in totality. That's not a nice case. Let's move on. We've talked about the 500% tariffs. Yeah. So the person I mentioned, right? Chief Economic Advisor was Mr. Anant Nageshwaran. He had said, "Go Swadesi." And the line which he wrote was, uh, clusters. So when it came to developing Atmanirbhar Bharat and how to go about it, the way he said it should be done is the clusters, five key clusters, right, in areas of semiconductors and defense manufacturing where real strategic gap needs to be addressed. He says pretty much every country rises on the back of a few clusters, and he names a few clusters. He says, uh, uh, one second, folks. So just one second. I'm missing out on the clusters he mentioned. Yeah. So he said industrialization always thrives in clusters such as Manchester, Detroit, China's Greater Bay Area, Vietnam's HCMC, right? And that's what India needs to focus on. Its clusters. This is radically opposite to what Mr. Sridhar Vembu says when it comes to uh, development strategy in general. He says that instead of clusters, right, we need to distribute it, because if we distribute it, it basically leads to better outcome, better quality of life for all the participants, right? And also it doesn't lead to Malthusian trap, and it leads to more equitable growth of the country. So that's what's the difference of opinion, right? But cluster thing is obviously tried and tested. Manchester was UK, Detroit was the automotive playground of US, China, Shenzhen became something very, very interesting, and Vietnam's HCMC. So let's see how that plays out, right? He also had a very nice, uh, yeah, thinking about buying Indian to buying Indian without thinking, right? So this is, where this is borrowed from? This is basically borrowed from Made in Japan, the Akio Morita book. So Akio Morita, sir, the founder of Sony, essentially wrote an autobiography called Made in Japan. It's one of the best biographies written, especially by a Japanese entrepreneur, right? So you don't know much about how Japanese entrepreneurs and stories have evolved. Akio Morita sir's Made in Japan is a very good example. So he wrote that when they were beginning to fight for Japanese on entrepreneurship or Japanese electronics manufacturing, right? It was not a very easy fight because Japan was not really famous for electronics manufacturing or high quality manufacturing of some high end stuff, right? We used to manufacture fans and stuff, the handheld, and it wasn't a great place, right? So to avoid that, made in Japan, the font size was reduced so that people don't notice it, and that sort of got used to get returned from the customs because they said that you have to abide by certain norms, right? And that was Made in Japan, the book, that we don't have to hide our Japanese entity, and we got to make in Japan and in such a way that Japanese manufacturing leads to very, very positive, reaction from people. And that's exactly what India is trying to do with its own approach, or let's say his suggestions. Strategic uh, clusters, he says: semiconductor fabrication, precision capital goods, battery cells, power, industrial chemicals, defense manufacturing, and so on and so forth, right? Uh, Tier 1 is obviously high urgency, Tier 2 is low, Tier 1 high urgency is the APIs, pharmaceutical APIs, and everything. We've talked about that. Let's move on, folks. Talking about global order, India had created an international solar alliance back in 2015, right, with Paris. With the French president Holland, Mr. Holland at that time, right? US seems to have quit uh, that particular alliance. I'm sorry about that. US has quit that alliance. US has quit a lot of alliances, 33 UN based alliances and over 30 non UN alliances about climate and about such, uh, missions, let's say, if you can call it that, the solar and so on and so forth. US has cleared its priorities when it comes to these particular play. The opposition of the current US regime, which is John Kerry, he was the climate czar earlier in the Joe Biden administration. He says that it's basically a shot in the foot. US is doing great harm to itself, right? And that is not a good news, but they've done it anyway. So 65 of such bodies, UN and non-UN, exited by US. International Solar Alliance was Mr. Modi's very ambitious plan to rally the world around solar energy. He's been very bullish on solar energy, and they wanted to mobilize some $1 trillion in investments. Now its future will be in jeopardy as US takes out, right? So let's see what happens there. Um, Nobody gives a shit about UN anymore, right? We've seen that. We've talked about this. We've been talking about this for a very long time. That UN and bodies like UN have launched totally, right? Have basically totally lost their relevance, right? And as they have done that, it's become more and more perfunctory to actually even pay attention to that. We all saw what happened to with WHO when it came to the COVID crisis. It didn't really do its job. In fact, the chief of WHO was shilling for China as China was unleashing everything. So it is these bodies have lost all relevance, and in my opinion, rightfully so. So I'm not at all surprised at US moves of leaving everything UN, right? Mr. Ankur Pandit writes, I agree with the clusters approach. In project financing, it is referred to as secondary benefits. For example, Chennai today has become the Detroit of India, with a lot of know how on automotive parts and assembly becoming much more common due to the scale of jobs created by this sector in and around Chennai. Automotive, when it comes to automotive, it's said that Pune is the Detroit of India, right? Not Chennai. But maybe Chennai has some parts. Uh, and that is true, right? Clusters naturally get formed because of network effects, right? When a particular factory gets launched, a lot of things start happening around it invariably. So because it's just you've got to bring in one anchor, and that one anchor puts everything, right? So that is essentially very important. What Mr. Sridhar Vembu sir says is that instead of overloading the cities, right, with more and more people, instead of uh, starting places which lead to migration, out migration from villages, right, to cities, that is a bad idea. Because it leads to Malthusian trap. So what Malthusian trap is that a technological intervention or technological innovation doesn't lead to the quality of life, a rise of quality of life, which you would assume it would bring, because whatever quality of life it brings is offset by an accompanying rise of population. So that's what it says. So if you bring a technological innovation in a particular geography, right, it should lead to a better quality of life. However, it doesn't, because that particular thing sort of brings in more number of people, and then everything gets balanced, right? So things stay where they say. That's called Malthusian trap. And that essentially has rung true when it comes to Indian cities, because Indian cities have a terrible quality of life, right? For all practical purposes, they are very very difficult places to live in, and that's because of so much of migration towards these cities, because of all work opportunities residing in this place, in these places. So Mr. Sridhar Vambu, his perspective around city, or let's say nation building, is to declutter, declutter, right? Keep the work in villages, small satellite offices, and so on and so forth, which I believe is very very smart, Mr. Pandit. So that was something. Let's move on, folks. There's a very interesting case that's going on. As you remember, Mr. Justice Verma, the corrupt judge who was found with a lot of cash hoarded in his house as the fire brigade came along, his impeachment proceedings were happening, were supposed to happen, right? And then there was just long silence. Turns out there's a case going on. He's appealing, and he requested for more time to submit a response to the panel, right? And that's time request has been rejected by Supreme Court. Reserves orders on Justice Verma's plea against Lok Sabha Speaker, forming a probe panel. So what Mr. this Justice Verma essentially came forward with was that, according to the law, Lok Sabha and Rajya Sabha are supposed to do it, right? But despite Rajya Sabha not having a member at that time, right, the speaker wasn't there, so Lok Sabha shouldn't have moved forward with its probe panel formation. So if it has done that, there is a procedural uh, black point, right? A procedural, uh, let's say, what do we call it? It's procedurally wrong to proceed with his impeachment play. So that's his argument. If I talk verbatim, the chief contention of Justice Verma against the constitution of the inquiry committee is that despite impeachment notices being moved in both houses of parliament, Lok Sabha Speaker Om Birla proceeded to constitute the committee unilaterally without awaiting the Rajya Sabha's chairman decision for holding the mandatory joint consultation prescribed by the law. Rajya Sabha's chairman position was vacant at the time after the abrupt resignation of Jagdeep Dhankar. So Mr. Dhankar had resigned, right? The Rajya Sabha chairman was not there, but Lok Sabha's speaker, he basically formed the committee. He shouldn't have formed the committee without Rajya Sabha chairman doing the same. If he has done so, it becomes legally invalid. So his proceedings shouldn't go ahead. That's a procedural legal maneuver. Supreme Court says they're not buying it. What do you think? Let's move on, folks. Yeah, so we've talked about the Adani deal, right? Adani and Airtel. Telcos are sparring with Saudi-based ACS, which has spent around 120 crore to set up its own telecom equipment. I'm just clarifying, what was that 90 lakhs? Yeah, per month per operator. So it's not even an area thing. 690 lakh monthly per operator versus 15 to 20 lakh at Delhi T1 airport and 45 lakh at Mumbai airport. So that was the contention. Let's move on, folks. Cardiac drug log highest sales as NCD cases surge. Medicines for heart ailments had the highest sales. Trend is expected to continue this year. Followed by anti-diabetes drugs, right? Anti-diabetes drugs are giving way to the GLP play, right? The insulin play is moving towards GLP, but cardiac drugs are growing 20%. That is obviously not a good news for India, but it's good news for pharma. A lot of cardiac episodes have been happening, and a lot of people have linked them to vaccines, right? But people are saying, no, that's a coincidence. Pericarditis, myocarditis, those are the two cases, inflammations when it comes to heart valves and so on and so forth. Interestingly, the GLP drugs also have a linkage with heart diseases. So what GLP drugs do is they lead to a rapid weight loss, but it's not fat loss, it's a lot of muscle loss, and apparently it's a lot of skeletal muscle loss, right? And heart muscle loss. And heart is very prone to losing that kind of a thing. So GLP drugs lead to or may lead to in future heart problems. So, right, 1 million, 12 lakh people going to take GLP into 2026. That's pretty scary. Pretty scary, right? Let's move on, folks. More shades of beauty take the gloss of big companies, big brands like L'Oreal and all, Estee Lauder, hit as local online companies steal the show. Beauty companies are dime a dozen now. There is practically no, uh, you know, what do they call it? Barrier to entry when it comes to starting a beauty brand. Almost all the beauty companies, beauty brands have access to pretty much the same manufacturers, right? They are all coming out with new formulations, many Ayurvedic and so on and so forth. All of that is leading to uh, pretty serious brand value erosion for the incumbents who have been around for decades and they've been selling all the stuff, right? Now, new online first brands are taking over that space, and that trend I feel is likely to continue. There is not going to be any stopping, and beauty as a business essentially is sort of starting to get commoditized, right? Especially when it comes to beauty product, not fashion, but beauty, the pharmaceutical, the cosmetic play. That's more or less looking at brand erosion of the incumbents and becoming a sort of a commodity, right? As new players keep coming in, you're gonna see. And similar thing is also happening when it comes to the FMCG players, right? So this is not just the beauty category. The food category is also seeing brand value erosion when it comes to the incumbents as new brands come and basically posit the same. It's just position similar or better products without that brand premium, right? So let's see how that particular terrain moves on. For now, this looks pretty irreversible. The contrary view to this is that the existing brands, the incumbents, they have a lot of marketing muscle, they have a lot of real distribution muscle. So as they warm up, they've been slow to adapt to this particular thing. But as they warm up to this entire paradigm of new brands, a lot of acquisitions and a lot of consolidation will happen, right? And they will absorb these brands and they will still stay where they are. Now the question is, uh, if brand absorption or if brand consolidation happens, is that going to help the cause, or is it just kicking the can down the road? Because in the next few years you're going to see fresh brands doing the same thing what the acquired brands did just a few years ago, right? So it's basically just a losing proposition brand wise, which is very interesting. Many legacy beauty brands are being sold, says Mr. Ankur Pandit, and he's right. Moving on. Esteemed Lauder, it's ST Lauder, is selling two-phased Smashbox and Dr. Jart. That is correct. That is correct. Growth slowed to 5 and 7% each in FY25 from 14 and 19% a year ago. So these two companies, that is L'Oreal and Estee Lauder, they had about 14 to 19% of growth last year, and now it's down to 5 and 7%. That is that does not look good. Let's move on. Yeah, let's move on, folks. New pressure tariff threat, more of a pressure tactic. We've talked about that. US solar allowance, we've also talked. 26,000 crore hydro project gets a nod after appraisal, being jointly developed by NHPC and Arunachal Pradesh government. Anything that happens to the Northeast is very, very beautiful for the country, right? We've talked a lot about this. Northeast deserves all the focus when it comes to infrastructure development. We need a lot of things to happen in the Northeast, especially Arunachal Pradesh, because of the Chinese imperialism, right, and expansionist behaviors. So India will have to move very, very quick, and this is a very good step in that direction. 26,000 crore hydro project. What India will have to be scared about will be, as US unabashedly takes over places on a whim, right? Basically expanding its territory and occupying places, Greenland, Venezuela. It's also threatening Colombia, Mexico, and so on and so forth, Cuba. What happens to China, right? Russia obviously gets a free hand. Ukraine is more or less a done deal for Russia, right? It's just a matter of time. What happens to China? It'll obviously take over Taiwan very, very quickly. And after it does that, would India be in trouble? Because China has talked about Arunachal Pradesh as South Tibet. That's what it says. And it says that Chinese reunification, the ancient reunification, is unstoppable. Would that lead to India and China conflicts, right? That is something that we'll have to be very, very careful about. And let's see what happens there. This, by the way, is a nudge for Indian government to spend more on defense. So defense should be a good investment in the face of what I just told you, because it's almost virtually certain that it's gonna be very, very difficult for India to defend if China takes over or assumes the US stance on expansionism, right? It's gonna be very important for India to defend itself. Let's move on, folks. Talked about Nifty in steady state. We've talked about that. Uh, Pharma and IT companies, profit to be hit. Banks facing margin pressure but believe falling rates, easing liquidity, and tax cut could boost 2026 show. So we've been talking a lot about automobiles, we've been talking a lot about banking, we've been talking a lot about IT, capital goods, cement, right? We had a good discussion on what happened with the cement industry. So we're not going to talk about uh, all that again. All we know is that these people are becoming bullish on IT. They see that IT sector might just lead to uh, good returns investment wise, and I would say that essentially is not a good idea because there are still systemic risks to IT, right? And as those systemic risks stay or don't get solved, they're not going to vanish away, right? They're just kicking the can down the road. TCS is definitely pivoting. A lot of other companies are pivoting in their own ways. So, but still, the main cash cow, right, which is the time and material model of the IT, that is in deep threat, and you never know what happens to the model. And if nothing good happens to that particular model, uh, the core business of the IT sector essentially gets hurt. And then there is also the GCC concern. So GCCs get added, they are loss of business for Indian IT. So there's a lot going on which is antithetical to the narrative that says Indian IT could be returning good on its money. So that's my analysis on the situation against everybody else, right? We did this years ago. I'm not sorry, not years ago, but 200 days ago when it came to defense. People said defense is not gonna return it. I said it would, and it did, right? They said FMCG is not gonna pan out. I said it's gonna pan out in the Q3, Q4, and it did, right? So banking, I said it's gonna be 3, 4 quarters down the line, 2 or 3 quarters down the line, it's gonna start recovering, and it did. So I'm saying that IT might not be a good bet. There could be some bad news coming along, which just destroys the narrative pretty effectively, right? So let's see what happens there. Uh, some data points. We expect a 12 to 15% net profit growth annually over FY25 to 27 for companies under our coverage, right? Uh, that's what these people are saying. Aggregate earnings growth for FY26 is expected at 8% for Nifty 50, 16% for mid cap, and 10% for small cap index. So that's what they're thinking. 8% for Nifty 50, 16% for mid cap 150, and 10% for small cap index. That's what's going on. Let's move on. They're saying electronics companies need to spark profit for the Dalal Street to take them seriously again. Keynes fell 47% last year. Cyient fell 36%. Dixon dropped 29%. Uh, Amber declined 15%. And Sirma rose. Avalon was up less than 2%. So they're saying a lot depends on whether the government renews the mobile phone manufacturing PLI. If the government essentially renews the PLI for mobile phone manufacturing, it could lead to a rally for these guys. Now the question is, will the government renew the manufacturing PLI for phones? Because it had been going on since 2017. It needed to end, and now it's ended. The government says it's a matured industry and it'll rather use that leeway to spur other growth in other sectors like the ECMS play. The component manufacturing will get the money instead of mobile phone manufacturing, right? The core product. What do you think is going to happen? I don't think the government has room to continue the mobile phone PLI, because effectively what you're looking at is a lot of priority sectors, especially at the component level, right? And if government continues to incentivize the mobile phone manufacturing, as the incentive for these companies for vertical integration would reduce, and that is antithetical to what the government wants them to do. The government essentially wants them to go vertically integrated, right? So that deeper expertise can be, and that happened. So Dixon has acquired or is setting up, vertical integration as a response to PLI stopping. So I don't think the PLI play is gonna work out for mobile phones any longer. But if you have a contrary view, please share, and that would be interesting, right? JP Morgan said the outlook for EMS stocks hinges on three key triggers: a possible extension of mobile PLI, expected rollout of Indian semiconductor mission, and progress on India US trade deal. Yeah, India US trade deal is definitely one of the very big hinges. ISM is great for the component manufacturing play, but mobile PLI, I don't think it's gonna work out. Let's see. Let's see how it plays out. Let's move on, folks. Exporters slump on US warning of higher tariffs, of course. Textile pharma stocks take a hit. Uh, 500% tariffs really scared the textile guys, right? Textile guys, by the way, are very happy with the duty free cotton import. So that's what's happening with them. They are very happy as far as how India is being able to. So cotton used to have a duty to protect Indian cotton farmers, but then Indian textile industry as a result was becoming uncompetitive because our cotton was expensive, which made our product expensive. Because our product was expensive, the export markets weren't warming up to us. Bangladesh and other places were cheaper. So what the government did was they put out the duties on this particular play, the cotton thing. So we started importing US based cotton, right? And that sort of brought our final product cost down, which made our products more competitive. This was also a nudge for US to essentially warm up to a good trade deal. So that happened, and now that's working out in our favor. However, the new tariff situation obviously uh, scares people. Let's move on, folks. Initially 26% tariff raised to 50%, now 500%. Very weird. Let's move on. Torrent is betting 1 lakh crore or energy building new B2C platforms. Torrent Energy, 1 lakh crore, that's $12 billion. That is a plan, not materialized, but something heavy, right? Capex across thermal power, renewables, transmission, distribution, energy storage, and green hydrogen. That those are the areas where this 12 to 14 billion dollars worth of capex is estimated. Let's move on. Banks blunt NBFC's edge in gold loans. Aggressive lending, easy liquidity helps bank raise their share to 49.7% in 5 years. NBFCs had cornered the gold market. Banks were slow to adopt to it. Right? The gold loan market has been very, very good for the banking sector in general because there is literally no delinquency, very low, right? Loans payback has been pretty good, right? In case of a delinquency, in case of a default, the collateral clawback has been very effective. Gold's prices have been rising, which has led to a lot of good news for uh, people like Muthoot Finance, who have like a 2 lakh crore AUM at the moment for gold loans, right? So that's what's happening. Banks are rapidly gaining ground. NBFC's share of aggregate gold loans fell by 20 percentage points over the past 5 years, from 70%, 69.4 to 50.3%. That's what's happening. This is very healthy. Let me check the Muthoot Finance stock. We talked about that, right? Muthoot Finance. So we were talking about it on how it can be a way uh, for the debt pairing thing. So viewers, oh, it's already risen 80% last year, which is awesome. So we talked about in the last episode, we said that one of the viewers of Thinkers Frequency was going through a debt situation and he wanted advice and help on what can be done to alleviate that situation. It was somewhat like a 12 lakh debt kind of a situation, right? With 1 lakh cash and then 20,000 per month kind of a saving thing. So 1 lakh starting corpus and then somewhere around 1 lakh 40,000, 1.5 lakh rupees yearly, and that debt needed to be paid in, let's say, 2 years. So what can we do? So we were talking a lot about other the kind of things that we need to track, right? So if you remember, we said uh, defense as a sector could be tracked. Then we talked about what all sectors. We said we're gonna create a tracker for it. I'll have to look at that episode again and figure out and note it down somewhere so we don't forget. But the gold loan thing has been working out for Muthoot Finance a lot, and we talked about it that 6 months ago, and since that time, it has really grown 80% in a year. That's awesome, right? We need to find such bets now, looking into the future, so that that person's debt thing gets sorted out, and we essentially gain from all these discussions, right? So that is the idea. Let's keep it on the lookout. Outstanding gold loans surged to 3.5 lakh crores by November 2025 from 89,000 crores in November 23. Banks are pretty good there, right? Let's move on. Raise larger. Okay. Yeah, we've talked about gold prices rising 68%. And we are also saying that gold could fall now that the US debt situation gets solved, right? So that is also a thesis, although this needs to be fleshed out, debated a little more. Let's see how that pans out, right? Moving on, folks. Credit costs rise for Shapurji Palanji Group. We've talked about this, right? Goswami Infrastructure, Infratech, a borrower linked to the structure, did not complete the refinancing in December, leading to this particular play. The covenant has not been breached by Shapurji Palanji, but 2% higher outgo. SB had repaid partially using proceeds from AFSCON infrastructure listing, right? Although 1.7% remains outstanding. So Shapurji Palanji remains in trouble, in talks to raise $2.5 billion in fresh debt. Let's move on. UN has raised India's GDP forecast to 6.6%. Pegs next year growth at 6.7%. We talked about that. Inflation forecasted at 4.4%. Strong demand for Indian goods in Europe, West Asia offer US levy impact. We've talked about this. Let's move on, folks. Textile is in trouble. Textile is a $10 billion investment, export play, and it's very much in trouble. They say that the order book may fall up to 50% in first 3 months. Nothing of this, I don't see this actually panning out, the 500% tariff, for a very long time. So a lot of this news essentially is noise for me because it's gonna change. But for now, the sentiment is bleak, and that's very obvious. New cars will have to speak to each other, says Mr. Nitin Gadkari. He says there has to be some sort of connected car technology which leads to lesser road accidents so that people can be warned as cars are beginning to collide or something of that sort. Connected car technology. He obviously went to China and saw it, right? So that is going on in China. He says by 2030 we'll have to have vehicle to vehicle communication, V2V communication. That is obviously a good idea, right? Ministry has set a a target of reducing road fatalities in the country by 50% by 2030. Over 5 lakh road accidents were reported in the country with 1 lakh 80,000 fatalities, right? In 2023, 5 lakh road accidents and 1 lakh 80,000 fatalities. That is a lot of unfortunate deaths happening due to road accidents, right? And Mr. Gadkari says vehicle to vehicle communication is a step in that direction. Let's move on. This data has been collated by Save Life Foundation. Save Life Foundation is a pretty solid NGO working in this. They have been talking about this for a very long time. One of my friends is the ambassador of Save Life Foundation in a way. Pratishtha Devishwar, she's a very nice person. She basically, in an accident, when she was 12 years old, her car went through an accident and she became paralyzed from chest down, and she's a very big disability advocate, right? She was in LSR, then she went to uh, Oxford University, then she went to Canada, and so on. Now she was also the Ladli Behen uh, ambassador of Punjab, Ladli Behen Yojana ambassador of Punjab. That's beautiful. And Save Life Foundation is urging vehicle to vehicle communication as a part to solve the product accident problem. Let's move on, folks. Swami Fund helps deliver 61,000 flats across 110 housing projects. Right? Government backed alternative investment funds approved in November. Last mile financing to stalled housing projects has enabled 61,000 plans. So we've talked about Swami, right? We talked about how the fund has unlocked a total capital of over 37,000 crores across 127 projects, LIC and other players, right? 15,000 crores, 61,000 flats delivered. That's very good news. Let's move on, folks. No road tax on industrial vehicles in closed premises. SC sets aside High Court ruling in Ultratech Cement case, says dumper excavators and service miners, not motor vehicles. That is lawyers making money, right? Moving on. So there was this case whether these guys should be paying road tax. Moving on. US is seeing great capital rush. We've talked about that. As India's the SOIs, the sovereign funds essentially take money out of India, US is getting a lot of money. US is really getting a lot of money. Sovereign wealth funds taking money out of India. Overall global investments by SOIs grew 32% in 2025, but India, of course, fell 70%. That's very bad. Some numbers on, yeah, that's what. And Gulf is leading the charge. Let's move on, folks. AI Summit lays out red carpet for India's sovereign AI dreams. Mr. Modi has met a bunch of companies, Indian companies, 12 companies, and they're talking about local languages and fixing all of those issues. The trouble lies in the adoption. We've talked a lot about this in previous episodes, so we're not going to repeat ourselves. However, some steps seem to be beginning when it comes to Indian AI mission, right? Mr. Ankur Pandit says a lot of good work has been done by the Mahindra Group to bring down the number of accidents on the Mumbai-Pune Expressway. Clear markings, speed regulation markings, clear demarcation of lanes for trucks and light vehicles have helped bring down the number of accidents. That is beautiful. Thank you for sharing that, Mr. Ankur Pandit. Let's move on. DigiPay, Razorpay is inviting pitches for IPO. 4,500 crore IPO. Kotak Mahindra Axis Bank front runners for the IPO underwriting role. Razorpay is obviously a pretty solid company. It's a payment aggregator. If you don't know, the primary payment aggregator, Indian payment aggregators, there is Razorpay, there is Payu. There was a Citrus Pay company which got acquired by Payu. So Payu is essentially the merger of Citrus Pay and Payu, right? There's then there are POS, point of sale companies, which are doing what they're doing. And Razorpay, by the way, has pretty solid prospects, right? It was valued at 7.5 billion in 2021. So let's see, when it raised $375 million some 4 years ago. Let's see what it is being able to do now. When it comes to profitability, Razorpay is right now not profitable. Not profitable, definitely, right? But it should be. It's one of those companies which should be able to make money because of structural advantages that the business model has. So Razorpay is essentially the window for any small and medium business to accept payments online, right? If you've come to that positioning, it's hard to keep losing money. However, I'll tell you, so consolidated net revenue was 3,783 crores right? And gross profit jumped to 1,277 crore. However, the company incurred a net loss following ESOP expenses of 1,200 crores. So there was a net loss, but gross profit was 1,200 crores at a revenue of 3,783 crores. That's about 30% of gross profit. As I said, it should not be hard for Razorpay to make money going forward. So this is one of those IPOs which are just, it's a good long-term story, right? What's your take on the recent IPOs paying more than 62,000 crores straight to promoters and early investors via OFS? Asks Mr. Ankur Pandit. Well, we've talked a lot about this, Mr. Ankur Pandit. We've written articles. We've said that this is going to be very complicated, right? All is good when the story is good, right? In a bull market, everybody is happy. But everything turns very, very bitter when the market essentially falls, right? When something wrong happens to the market, people were expecting that something wrong will happen to the market in 2025. Thankfully, 2025 turned out to be real great. Hopefully, 2026 will be just the same. But if something wrong happens, right? That is, uh, somebody's debt not pairing up, US market crashing, some bubble of AI getting popped, and so on and so forth, right? Some financial irregularity, the data center drawback, which Dr. Michael Burry has been pointing out. When something bad happens, all of these things will be center stage, right? Right now, since everybody is happy making money on the IPOs, they're not really questioning the incentives. There are murmurs, but they're not too loud. But if something wrong happens here, then you're gonna be talking a lot about it. Though we've written big pieces on Lenskart, a lot of other IPOs as well, right? Even Upgrad is gonna go with an IPO. And with that, we come to the end of the 202nd episode of Thinkers Frequency, folks. 202nd episode. Our weekly mental workout, a weekly dose of insights and analysis that don't lead to paralysis right before we punch in. Uh, it's 9:37. We should punch in anytime now. I hope you had a good session. I hope you liked what was discussed. I hope everything. You learned a lot, had fun. It was definitely a lot of fun. Though I felt deeply out of practice. I felt very, very out of practice when it comes to the way of speaking. Right, I was really growing uh, when it came to articulation of my thoughts. That had become very, very smooth. But today I felt a bit, uh, you know, out of form. So I hope it didn't bother you too much. And also, I'm reconsidering on how to message people. I thought the Thinkers Frequency group will be good, but I do believe something wrong has happened when it comes to bringing people here. So I'll probably just message the regular group. It's just a once a week. It's just once a week now, so hopefully it shouldn't be a problem. Anyway, please take care. Uh, I wish you a beautiful day personally and professionally. And I'll see you tomorrow, same place, same time. Not tomorrow. I'll see you next week, same time, same place, same time, hopefully. Have a nice week. Take care. Bye bye. Some comments. Razorpay, true to its name, is also very responsive, speaking from experience, having dealt with them for startup looking to set up business. Now they're really green. So I should thank Mr. Pandit G. Kanpurwale and Mr. Peeyush Sethi and Mr. Ankur Pandit. Thank you. And everybody else who joined. Bye. Form is temporary, class is permanent. Thank you. Thank you, Mr. Pandit. So sweet of you. Cheers.